The Dow has surged over 1100 points on news of a U.S. China trade war ceasefire. It's a temporary one, but markets have cheered the 90-day tariff pause. Meanwhile, a delay looms possibly over the India-US trade deal. As the fog lifts on President Trump's global trade policies, uncertainty, the market's biggest enemy, is finally easing. So what lies ahead for markets, global markets, as well as the Indian markets? To break it all down, I am joined by one of the world's leading voices on emerging markets, Mark Mobius, the chairman of the Mobius Emerging Opportunities Fund. Thank you very much, Mark, for sparing time and joining us here at Business Today. I want to begin by asking for your first thoughts on what clearly seems to be a ceasefire as far as the United States-China trade war is concerned. Is the era of escalating tariffs as far as these two major economies is concerned behind us, and what implications do you see for global markets and investor sentiment?
I like the term you use, ceasefire, because the war continues. At the end of the day, there's no question that China was desperate to reach an agreement, because with the tariffs they are now, the export manufacturing in China is being decimated. But at the same time, Trump needed to have an agreement as well, because the market was not behaving very well. And he's keeping an eye on what's happening to the stock market in America. So what we're seeing now is, of course, some agreement, but it remains to be seen how this will be implemented, because, as you know, there's a lot of non-tariff barriers that China has to reduce or eliminate. And it remains to be seen if those non-tariff barriers will be accomplished and implemented. So this is going to be an ongoing story, and I don't think we can conclude that everything is finished and the agreement is concluded and nothing will happen from here on in. So it is a ceasefire, as you pointed out rightly.
Would you say that this easing of trade tensions has lowered significantly the probability of a recession in the United States?
Yes, I believe that there's going to be less chance of recession in the U.S. Of course, you must remember that Trump is now implementing a number of other measures, including boosting manufacturing in America, having companies in America invest more, and of course now with the move to reduce pharmaceutical prices, that will have a big impact on inflation as well. So there are a number of measures that are now being taken which probably reduce the chances of a recession in America.
What will therefore the consequences be for the global economy? Because we started off by talking about uncertainty and markets don't like that. Would it be fair to say that the global economy is entering a more stable phase vis-a-vis what we had thought at the beginning of last month?
Yes, definitely, because more and more of these trade agreements are being made. As these agreements are made, then stability will return and confidence will return. So I think probably in the next 3 or 4 months, you'll see a much more stable environment.
What is your view on the US dollar in the near term, Mark?
I think probably the US dollar will strengthen from where it is now. As you know, it's gotten significantly weaker, but I think it'll probably strengthen as we go on. As people begin to get more confidence in what is happening, return to the US market, I think the dollar will probably get stronger going forward.
And Mark, what would that mean for emerging markets, particularly markets like India, with the possible pivot by the Fed and risk appetite returning to a significant extent?
Well, I think one of the things that is going to be good for India and emerging markets generally is that investors around the world realize that they cannot depend only on the US. They have to diversify their investments. And so you'll see more money flowing into emerging market countries. And of course, India is at the top of the list.
Since we are talking about India, I want to sort of get you in on another possibility that had emerged on account of the trade war unleashed by Donald Trump, and which was that India was seen as a possible beneficiary of companies de-risking themselves from China. Apple is one example, and there are many others, and coming to India and setting up manufacturing and export. It was not going to happen overnight, but this was a possibility that many experts had spoken about. Would it be fair to assume that with the kind of trade negotiations that the US and China now have, that window for India seems to have dimmed a bit?
No, I think India will definitely benefit, but India has to move more quickly to reduce the bureaucracy for entering the market, for having companies come in to establish factories, etc. So that's a big challenge for the Indian government to see if they can make it easier for countries to come into India to manufacture. Nevertheless, the fact that the trade barrier that China has compared to India in the US market is much better in India's favor. The Indian tariff is lower compared to China. Therefore, India is going to be in a good position to export to the US and also to boost production generally of all kinds of goods and services.
Mark, I wonder if you've been following the news on the US-India trade negotiations. There was a time till just a few days ago, possibly a week or so, where the US seemed to have indicated that a trade deal with India was imminent. And then we've kind of seen a couple of developments take place. Commerce Secretary Howard Lutnick seems to have said that it will take time. India has moved the WTO against duties imposed by the United States. And India's Commerce Minister, as per news that's just emerging, is scheduled to visit the United States for trade negotiations. How significant will a US-India trade deal be from an overall investor sentiment point of view, Mark?
It will be very, very significant because if they can reach a trade agreement, and by the way, the trade agreement includes not only tariffs, but non-tariff barriers. Now, if India can reduce those non-tariff barriers, this will be very, very positive for India because companies that want to manufacture in India must import machinery, all kinds of other products in order to put together a manufacturing system.
Mark, for various Indian sectors, there is a bit of negative commentary that has emerged from the India-United Kingdom trade pact announcement, automobiles being one example, or perhaps even pharma sector going forward. Do you think, in your assessment at this stage, because the US trade deal is not yet done with India, that there could be certain sectors that might get impacted negatively in India and certain that could be beneficiary from an investment point of view in the future?
That's a very good point. And I think what we have to do is now look at the agreement between the UK and the US. Now, that agreement will be a symbol and a postmark for what will happen between India and the UK. So I think we have to look at all three of these countries to see what kind of agreements will be reached. But certainly what the UK and US trade pact comes up with will be reflected in what's happening between the UK and India.
Mark, what about your regional preference? Has it changed? Are you now more bullish on China after the trade thaw, and could that possibly be at the expense of India?
No, I'm more positive on India. China is still a question mark. There are lots of questions we have to answer as regards to China and entering the China market. That doesn't mean that there are very good companies in China, but we would be more cautious until we see how the agreement between the US and China works out.
Have you begun redeploying capital in the light of the emerging macro backdrop? And if you're doing that, what markets are and asset classes are you considering?
Yes, we now about 60% cash with our new fund. We're still waiting for approval to enter India. Of course, when that happens, we'll be able to increase our India component. But we're now looking at countries in Southeast Asia in particular. Vietnam is at the top of the list, Taiwan, Korea. These are countries that we're looking at very closely. Elsewhere, Turkey looks interesting, and Brazil in Latin America. But most important, we're looking at sectors that are innovative. In other words, countries and companies that are innovating in technology. And of course, that will be the emphasis for our fund. Companies that are innovating, that are entering new fields, and that are using technology to produce better products and more useful products for the consumer.
I want to ask you, in your view, does big tech really know what to do with the emergence of generative AI and the implications that it has for existing businesses and future opportunities?
Of course, all companies are focusing on that and are using generative AI technology. And of course, it's not only companies, but consumers are using this technology more and more. It's affecting the entire investment world. But you must remember, generative AI is simply faster communication, faster computation, and more information. That is going to really drive the growth in many of these companies and is going to be very important going forward.
Therefore, where do you stand on this debate about the hype cycle of AI and certain companies enjoying till recently very high valuations that seems to have tapered off a bit? From an overall valuation perspective, what would you have to say?
Yeah, it's true that some of these companies have been overvalued. Whenever you have a new technology like this, it creates a lot of excitement, and you end up with sometimes pretty crazy valuations. So I think we have to wait and see how things settle down before we commit a lot of money to these kinds of sectors.
Have you made any commitments in the recent past in this particular specific space?
No, not specifically. In other words, we're not going directly into AI companies, but we're going to companies that use AI. That is really the focus for us.
Okay. I want to come to India and ask you about the sectors that you see, and this is taking forward from your earlier answer, that investors like you hope to capitalize on in the future.
Well, first of all, the military sector, defense sector, obviously is something we have to look at in view of what's happening with Pakistan. I think the Indian government will be spending more money in that direction. Second area would be in technology companies. In other words, companies that are producing software for not only domestic use, but export. That's still a very good sector. The third sector is housing. We believe that there's going to be greater and greater demand for housing in India, and that's one area we want to focus on.
You had previously, some time ago, mentioned companies like Tips Industries, NetWeb, and a renewables company as your top picks at that stage. I wonder if there are any fresh ideas that you could share as far as specific counters are concerned.
I can't give you any specific names yet because we haven't started investing, but we'll leave that for another time.
Mark, what about gold? Gold is a passion for India, and gold seems to ride through every cycle. In my own reporting journey, I have seen gold being one constant that you can't do away with in India. You understand gold very well. What's your outlook on that?
As you know, I've been talking about gold for quite some time, and you've heard me say that people should have at least 10% of their portfolio in gold. I keep physical gold, and I think everyone should have it. Now, the question is when to buy. No one knows what the price is going to be tomorrow, next week, or the week after, but dollar cost averaging going into gold gradually makes a lot of sense.
From your answer, I'm tempted to ask you about your assessment of the overall FII mood towards India. Several months ago, we saw an outflow, a pretty significant one at that. But recently, we have seen signs of a reversal. Would it be fair to say that FIIs are back for good as far as the Indian markets are concerned?
Yes, of course, you must remember there are two sorts of FII. One is companies that are investing in plants to produce in India. That's one. The other is portfolio investing, where people are going into the stock market. I expect both of these to increase, but the former, in other words, companies that are building plants in India will be much, much larger going forward.
Mark, I want to also ask you about market levels. We saw during, with the ceasefire between India and Pakistan, the markets have obviously reacted positively. What's your own sense for this year in terms of possible market levels in India?
I still think the Indian market will go up further from where it is now. And I think you're going to have a continuing bull market in India, of course, with corrections along the way.
Okay, that's a fair assessment. As we wind down this conversation, I want to come back to the macro theme for a moment. We have had consistent policy making over the last 11 years, a third term for Prime Minister Modi, and very clearly it seems that as far as the government of India is concerned, doubling down on the capex theme, continuing with social welfare and supporting innovation across sectors. And now you spoke about defense as an immediate priority. From a broader structural point of view, how would you rate the performance of the government in India and the kind of initiatives that it has been focused on?
The Modi government has been incredibly beneficial to India. Mr. Modi has done wonderful things for India. And most important is the digitization of the Indian economy. As you know, he has been emphasizing more and more digitization, mainly to get around all of the restrictions that people face with the bureaucracy. And I think Modi is an incredible leader, a real great leader, one of the greatest leaders that we've seen in the world today.
Mark, towards the end, I want to ask you, what are the possible next major triggers? And two parts to that question. One, globally, the United States, and then, of course, India, in your view.
Well, globally, peace in Ukraine, number one, peace in the Middle East with Iran giving up the nuclear option. Those, I think, are two areas which are going to be looking good under the Trump administration. And then specifically for India, let's face it, tensions with Pakistan will always be there. But the good news is now we have a ceasefire, and hopefully we can keep things on a more even keel. And if Pakistan can pull itself up economically, that would be very, very beneficial for everybody concerned.
Absolutely. That's a good point to end this conversation on. Mark, as always, really value your time and your wisdom and judgment as far as the equity markets are concerned. Nobody better than you to give us view and a sense of how investors like you are looking at the current scenario, both globally, the United States and in India. Thanks once again for your time with us today. Viewers, with that, it's a wrap on this conversation with Mark Mobius. We'll leave it here and come back with many more market masters. Until then, goodbye.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.